Good morning, everybody. Good afternoon and good late evening from all of our folks that are here from Singapore and Jakarta and all over around the world. May even have a few of you from Dubai and, of course, everybody from our good old USA right now. A lot of things changing here. Welcome. Today I'm gonna these classes that we do each Friday, they're a short version kind of to expose you to what we do at the Market Institution in putting pieces together to help verify information about why price changes direction. Okay. Now, this is something that I have discovered in looking for a specific reason why price changes direction. And we've been able to use this leg base to kind of give us that understanding that when there are leftover unfilled orders, there's a little footprint over on the left-hand side of the chart. Okay. And we want to monitor that little footprint and use it to verify why price change direction. But we also will be using that to help forecast turning points ahead of time. Before we jump right into doing that, we're going to take a quick look back. We're in a couple of trades here on the leftover from our live trading room. And we did have a nice zone entry right here. And I want to point out, because this is what we're going to be teaching you here in just a moment. Okay. When we go way over to the left-hand side of the chart and we look where at the price pattern where we have drawn our lines, we come up with an area. I do want to point out that there are some other qualifications to pick the right leg base group of candles. Okay. But I'm not going to cover that today. The first thing I want to cover with everybody is, why did price change? What was over here that was a very consistent picture, pattern, something even a computer could recognize? Okay. And what I find is that this is the first steps to verify why price has changed direction. Okay. Now we're currently in a couple of little trades. We do have a place where I'll be teaching, so I won't be adding on to the position because I like to watch it too much. But as you can see, price had dropped this morning. We had another supply zone up here, and if you go over to the left, you'll find that we used the leg base in a proper location to anticipate that turning point ahead of time. In this morning in the pre-market, I took the move to the upside, and then we took the move to the downside, and a lot of traders in our live trading room, they did pretty well. Even some surprised me. They made over $2,000 on just trading a few micro contracts. And I don't think they had more than $100, $200 worth of risk on the trade. Okay. So we have the NQ on its way, and as I'm anticipating price to move up, I'm looking up and left, and we'll look for basically a profit target on this particular trade. I'm going to shoot for right around this area. Okay. Now, if we go out to a little larger time frame, you'll find out why I'm anticipating that level, and we'll talk about that in future classes. Okay. We also took a trade on the S&P. Notice how it formed a fresh accumulation of orders. We had sell tickets pushing price down, and we had more buy tickets down below. Now, the S&P, I am expecting price to move up to that 6,126, and here's why. Okay. The area in between a support and resistance area is what we call the dead space. And within the dead space, supply zones and demand zones often fail. So we are anticipating an easy price movement going back through this area. In just a a small glimpse of what we do in our course material is when we have a choppy, kind of grindy wave move down, we usually have a pretty direct and strong price movement back up. Now, with our pre-market routine information, we still, and while we're going through this session, we still have two Fed speakers coming out, okay, which might impact the market. What you're looking at here is a look at our pre-market overview, our supply zones, our demand zones. We did have one on the Dow right here that triggered today, and we're kind of sitting back waiting for that one to play out. And I'll show you the picture in just a moment. Okay. Here we go. Just come over to the Dow. A little larger time frame. Here's our prep screen zone. And when we go over to the left, we're going to look for that leg base group of candles. Okay. When we start to verify information on the price chart and we see something that is consistent time and time again, where price change direction, okay, kind of got to sit up and take notice. Okay. So welcome everybody. If you're watching this in the Zoom, there is a chat box there. If you have questions, do not hold the questions. Let them rip. Just ask the questions in the chat, and I'm happy to cover them while we're going through this. When you get exposed to this information, you're going to have a lot of questions that are going to be like, well, what about this? What about that? What if? What if? Okay. When you start applying and verifying the information, you're going to change those questions to how to. Now, I'm talking about this right now because you're going to get exposed to using the leg base group of candles. And we're going to see why price changed direction. There are other elements to this, but this is the first step in how you will verify and then use that verification then to anticipate a trade opportunity. I'm not recommending you take any trades right now until you've gone through the course material and understand why prices are moving and the location of where zones are located. Okay. But let's get started here. The information contained in this presentation should not be construed as a recommendation or an offer to buy or sell any security or financial instrument. Additionally, information contained in the presentation does not imply the suitability of any investment strategy. We are not licensed brokers or investment advisors. All attendees of the presentation and purchasers of our content are encouraged to speak with a licensed representative of their choice regarding the appropriateness of investing, trading, or trading of any investment, any trading strategy. We are using real-time market data and will be executing trades in a simulated account during presentations. No offer on our part respected a sale or purchase of any security is intended or implied, and nothing contained in here should be construed as a recommendation to take a position in the market. The intent of this information is for instructional and educational purposes only. Any fair use of third-party trademarks or logos does not imply an affiliation or a sponsorship. All trading involves high risk. Past performance is not indicative of future results. We make no promises, guarantees, warranties suggesting that any information shared will result in a profit and not in a loss. And you also agree not to hold us legally or financially responsible for any reason. Done. All right. The purpose of this short class is to expose you to a picture on a price chart and also to help you train the eyes where to look. Okay. Now, in this presentation, we are going to open up and look at picture perfect past trades. See, often when I'm around other students or people that are asking questions about trading, or even the most experienced traders, I say, show me a picture of your perfect trade. Okay, it doesn't have to be one that's happening right now, but show me one that happened over on the left-hand side of the chart. Okay. I mean, after all, we have hundreds of thousands of picture perfect past trades. Okay. And if you look at the picture perfect past trade, you'll start to see that there's some characteristics on the left-hand side of the chart that it will then help you forecast and turning points on the right hand. But the verification process, okay, and this is going to take a lot of rewiring, okay, and that's the tough part right now is we have to rewire some of that bad behavior and what we've already been seeing on the price chart. So the purpose of the showcase is to enlighten you to a new way of trading and looking at the price charts. Today, when we were taking that trade on the Dow, okay, price was going straight down into it. Now we've all been conditioned and told, don't catch the falling knife, right? But if you knew that there was a picture on the price chart on the left-hand side of the chart that helped you forecast that turning point, you would then understand what your risk is on the trade and you can properly size that position. See, right now what's starting to happen on this price chart, on this time frame, okay, is as you're looking at the lowest point and you start counting about 7 to 10 candles, okay, about the 10th, well, right around the 7th or 8th candle, you're going to see that the indicators, RSI, CCI, MACD, stochastics, all of them are going to start to show the crossover for a buy signal. Okay. If you want to get into turning points ahead of time, you're going to have to use the information on the left-hand side of the chart. This little group of candles that we're going to talk about today and verify information, okay, appears to be present each time price changes direction. So if it's there each and every time, then we have a starting point to start looking for additional information to even enhance that entry and manage risk a little bit better. Okay. All right. So we look at shapes and patterns each time we're going through this. Okay. So let me training the eyes to look left. Okay. Then we're going to start with the process, but what are we looking for on the left-hand side of the chart? When you approach any chart, you're going to start to look at different structures and patterns. Within those structures and patterns, you start to find areas. You know, you got the wick over wick, you got a drop base drop. Okay, but what's going on right inside of each one of these areas? When you drop down to smaller time frames, you start to see that there's a leg base group of candles. The leg base group of candles is a very specific group of candles. Okay. Colors matter, the picture matters, and we're going to go into all that detail. So why do we look left? We train the eyes to see the picture on the price chart. When we know what we're looking for on the left side of the chart, we can better anticipate the right side. Now, this does take about 100 times of identifying picture perfect past trades before you start to develop your confidence. Okay. Then it'll take about 25 times watching the trade come right down to zone, then turning and going back out before you start placing live trades. Okay. Now that process is very much needed because we're going to rewire the way you look at a price chart. Okay. So again, welcome everybody as we get started. We're always going to be looking for where we desire to get into a trade. Okay. Now, in order to get into this trade, a leg base must be created, a fresh accumulation of orders, and having that leg base in the right location to get that desired price move. This is a footprint of where banks and institutions have leftover unfilled orders. Okay. So again, as we start looking at any chart, we say, man, this wouldn't you have loved to get in long right here? Oh, I got one for you. The other day we were looking at gold, and we had an entry on this right there. I mean, uh, is that an awesome trade or what? Okay. When we look over to the left, we find that group of candles, which I'm going to describe for you and give you great detail. You have a leg in candle, a couple of base candles, a leg out, and another base. So when you place your proximal and distal line around that area right there, okay, right like that, you'll be able to catch trades like that. I mean, isn't that an amazing entry on that trade? Okay, absolutely fantastic. Okay. And the information around that leg base will also help you understand if you can use the zone twice or if you can only use the zone one time. Okay. We have lots and lots of pictures of perfect past trades, but also picture perfect trades that were taken in a live trading room. Okay. So this is our desired trade. Where do we look? We look left. Okay. We identify an area where there's a fresh accumulation of orders. Now, the accumulation of orders for a big bank or institution takes time. It's not one candle, it's not two candles, it takes time. They have a large amount of orders that they're processing, sell tickets and buy tickets. Okay. Now, we need to know what that looks like on the price chart. And later on, we'll take you into a step-by-step process, but not today. Today, I just want to give you enough information to go out and verify the leg base, and say, that was a perfect trade. In that process, you will start to see picture perfect past trades, and your eyes will get trained what to look for on that price chart. Okay. Again, if there's any questions, place them in the chat. I'm happy to go over those. Don't hold them off till the last minute. Ask the questions as you have them. Okay. So identifying different structure types. Okay. You have lower highs, lower lows, higher highs, higher lows. Okay. These are basic chart structures that we look at, but each one of the turning points often align with the leg base group of candles. Okay. So we identify different structures, pivot highs and lows, and then we start looking inside that area. And within that area, wick over wick, and then we got a drop base drop or rally base rally. And then we work the time frame down to the leg base group of candles. Okay. So in each one of these charts, they say they have that thing say, hey, buy the dips. Well, I never knew where the dip was going to happen when I first started learning. Okay. So we start looking at different price structures, and we start looking at the information on the left-hand side to help us get into each one of these desired trades. Okay. Structures with lower highs or higher highs. Okay. These can be seen around reversal and trending price patterns on a chart. Usually they're located high on the curve or in a downtrend low on the curve. Okay. So let's talk about the leg base. Okay. Leg base is a specific group of candles. It has to be so specific so a student can verify the information. It must be so specific that even a computer could replicate the leg base group of candles. That means colors matter, candles matter, time frame needs to be adjusted till you find the exact picture. When you start this learning about discipline in the markets and managing your discipline, is having a very specific chart pattern that you trust and can verify. Okay. You start becoming more disciplined to use it. Now, it will take you between about the first 50 times you're gonna struggle because it takes time to change the way you think and what you're looking for on the price chart. We look for this group of candles inside the buy territories and sell territories, which we'll cover in another section. This is just all about leg base today. This is where we often find unfilled orders, and in the future, we see price change direction. So some definitions here. A leg candle is just real simple. It's just a candle where the body is greater than 50% of the entire range. The color of the candle does not matter when determining if a candle is considered a leg candle. If price goes up, if price gaps up or gaps down, we also consider that a leg candle when we are analyzing stocks. Okay. Now, these are all pictures of leg candle. We identify the range going from wick to wick or tail to tail and so on. It's the whole range of the candle. When the body in the green or the red body of the candle is from the open to the close, okay, when that body is greater than 50% of the whole range, it is just simply what we call a leg candle, okay? A base candle is a candle which the body is less than 50% of the range. Pretty simple. Body greater than 50%, leg candle. Body less than 50%, a base candle. A combination of these candles, leg in, base, leg out, base, okay, is what we're looking for a buy zone or a sell zone, okay? Getting the terminology right. This is not drop, base, rally, base, okay? If you start talking to yourself that way, you're going to find that you're getting yourself confused, okay? Now, the shape looks like a drop, base, rally. Got it, okay? But this group of candles is very specific. Leg in for a buy zone must be red, always, okay? Must be a leg candle. Base candles, body less than 50% of the range, okay? Leg in, base, then the leg out. The leg out in a buy zone must always be green, okay? And then what concludes the sequence is the last or the first base candle after the leg out. Now, as we start going through this, I'm going to give you a little more detail. The buy territory, the first candle must be a red leg in candle, leg in, okay? Base candle can be any color, and I can have 1 to 5 base candles, okay? No more than 5. Keep it very specific. Most often you're going to have 1 to 3, okay? Leg in and the base. Then you have your leg out candles. They must be leg candles and all green leg candles, okay? You can have up to 4 leg out candles. Most common, 1 to 3, okay? The base candle after the leg out, okay, first base candle concludes the sequence. Leg in, base, leg out, base, okay? Now, why do we use that? Well, over here, we have a picture, and here we have the leg in candle, a base candle, a leg out, and a base. So this picture, this candle, group of candles, over on the left-hand side of the chart, was made several days before price came back down and tested it. See, this is a supply and demand trade. This is a picture of leftover, unfilled orders. Well, how do we know? Well, there were a lot more buy tickets and price changed direction. So how do we get and interpret or anticipate a high probability trade outcome? Okay, is we look left and find that leg base group of candles. For the sell zone, leg in, base, leg out, base. Base candle, body less than 50% of the range. Leg in, body greater than 50%. Leg out, And again, leg candle, body greater than 50%, and a base candle. For a supply zone, the leg in must be green, always. It must be a leg candle, okay? Base candles can be any color. You can have 1 to 5 base candles. Now, the reason I'm being very specific on this, because you've got to be able to change the time frame down or change the time frame up to get the exact picture. Push yourself to get the exact picture, okay? Now, there's going to be 2 possible outcomes. When we go to verify it, it's either going to be there or it's not going to be there. If it's not there, no problem. There's no trade. See, what we're trying to acknowledge is that if we're going to forecast future price movements, we need to have a very specific picture in what we're looking for. And this group of candles that we're looking at seems to be always present when price changes direction in the future. Okay? So if it is there, I'm willing to take risk on a trade. If it is not there, I'm not willing to take the risk. Okay? Now, here again, a nice little example. We love to have trade like this, desired trade. Price rallying right up, finds the sellers, comes right back down. But in order to get into a trade here, we would have to look on the left-hand side of the chart and locate leg in, base, leg out, base. And what we keep finding is that price respects those areas, okay? Now, as you are getting familiar with the leg base group of candles, you will have to adjust the time frame to get the picture. And sometimes I adjust the time frame down 1 minute at a time, 1 tick at a time to get the exact picture. So important to get the exact picture because what that does for you is it changes your belief system. Okay. If you are not getting the desired trades that you're looking for, okay, then you need to change your belief system in where you anticipate is a good entry and good risk. Okay. So as we are looking at larger time frames and working our way down, you may see areas where we have a red candle in and the green candle flips back up, or a green candle going up and then the red candle flips back down. Okay. So basically, larger time frame, we may see this as a flip. Okay. By adjusting the time frame down, you might find the next pattern, and most common, is a wick over wick area. Within the wick over wick areas, we find drop base drops and rally base rallies. And as you keep adjusting time frame down, you will then arrive at the leg base group of candles. Okay. It's very important to understand that time frame doesn't matter. These pictures represent where price changes direction in the future. Okay. Now, I am encouraging you, pleading with you. Okay. Do not trust this, but verify it. Okay. And I'll walk you through that process of verifying by showing you some examples as we go through it. Okay. So the high time frame, we will have some of the a higher time frame. We may have different candle patterns. What we are looking for as we drill down in time is to get to this very specific group of candles for a buy or sell zone. Okay. You guys all doing okay? Any questions? Okay. And I'm just going to pull up one of my pages over here. And let's start off with, well, you guys tell me, you want to start off with FX products? You want to start off with futures? You want to start off with stocks? I'll do a couple, and then you guys can type in the chat what you would like to look at. Now, I'm not going to look at what's going on the right side of the chart because that will save that for a little bit later. Okay. So let's start off with some stocks. I'll do a blend of these. Okay. And I'm just going to randomly pick a chart. Okay. I'm going to try to find something that's really easy for us to recognize. And I'm going to drop down to a smaller time frame so I don't have to do so much clicking and dragging. Let's see, Coca-Cola. All right. So as we start putting things together, okay, and this is a picture of Coca-Cola. Let's do something a little more. Oh, here we go. How about Walmart? Okay. See, we have price dropping, okay? But I want to use the left-hand side of the chart first. Hold on. Okay. So when I'm looking at this price chart, the first thing that I want you all to be doing, and this is using the lake base group of candle right there. This is what you're looking for, but you now know that you have a leg in candle. You can have 1 to 5 base candles, 1 to 4 leg out candles. Leg in, 1 to 5 base candles, 1 to 4 leg out, and then a base. So take a picture of that. This is what we're going to be looking for when we go into these charts. Now, when we're looking at any price chart, how many of you look at here and say, man, I wish I could have gone long right there. That was a beautiful trade. And maybe even you said, hey, I wouldn't mind even going long right here. Okay. Now, when we find a place on the price chart, and this is what you need to verify. Don't trust this, verify it. When you look over to the left-hand side of the chart, okay, and you look for in that range, we're going to be turning down the time frame to find our leg base group of candles. So step one, find a place on the chart a desired trade entry. Okay. To get a desired trade entry, we need to verify a leg base group of candles on the left-hand side. To help speed this process up, I'm going to be turning on a tool, which we call the Doji tool. And what this tool does is it puts a blue dot, in my case, a blue dot, on every base candle. Okay. So it makes it easier to see what is a base candle or a leg candle. Okay. So as we open this up, we're going to do a step-by-step to identify this. Okay. We're going to put a vertical line on the leg in. In a buy zone, the leg in must be red, always. Next, we have a base candle. We have a blue dot on it. It looks kind of like a leg candle, but the computer said, hey, that body is less than 50% of the whole range. Fantastic. We'll use it. Leg, base, leg, base. Now, we have the place a vertical line on the leg in and place a vertical line on the leg out. You should have only base candles in the middle. Okay. The first base candle after the leg out concludes the sequence. This is where we place our proximal and distal line around that group of candles, right? Like that. Okay. And as I highlight this area and the group of candles, leg, base, you can see that this zone did not become active until it moved greater than 2 to 1 away from it. So all this is just little noise, kind of basing, okay? But once price moved greater than 2 to 1 away from it, came right back to it, okay? Now we got kind of lucky on this one because the leg base was on the 60-minute, okay? Let's look at this next one over here where I have the area circled, okay? And then we're looking over here, so well, I don't see that leg base. Got it. So let's drop down in time frame. We can go down any increment. Okay. I'm just going to drop this down. Let's try 40-minute. Now, one thing I have noticed is that once I started doing this, okay, I became much it became much easier for me to interpret the became much easier for me to see the picture. Okay. Now, it will take you about 50 to 100 times of verifying this information. Now, the thing about using the left-hand side of the chart is you already know the trade works, so you got the pressure off. Okay. The pressure is off. I'm not looking for a trade. I'm looking to verify information. Okay. So as we identified the area on a largest 60-minute chart, we dropped it down to a 40-minute chart and we started looking a little more close. Okay. Now I still don't have the leg in, base, leg out, base. Okay. So what we're going to do is drop down another time frame. I'll start with 30-minute. All right. Well, we have kind of the picture, but we got 1, 2, 3, 4, 5, 6. Oh, we can only have 5 base candles between the leg in and the leg out. Okay. So that's not the right picture, is it? So from this time frame, I'm going to start dropping it down about 1 minute in 1 minute increments till we get the right picture. 29-minute. Yeah, we have leg in, 1, 2, 3, 4 base candles and a leg out. Okay. That would qualify. A computer would have to recognize that that is a zone, right? Remember, we have to be very, very specific. Place a vertical line on the leg in. Place a vertical line on the leg out. In between the leg in and leg out, you only base candles, 1 to 5. First base candle after the leg out concludes the sequence, and you have that leg base, leg base. Now we still have 29 more or 28 more time frames to go down. If you want, if the zone is too wide, you might want to keep reducing the time frame to look for that. The important thing that the outcome here, and this takes a few times of doing, is this leg base group of candles was in front of what we desired as a trade. Okay. This happened before a change. This was present before price change. Okay. Let's grab another one. I'm just randomly picking highs and lows or picking charts. We'll just leave it on this time frame. Now, gaps are the origin of the strongest imbalance. And this would have been a great trade opportunity to go long from about $238 up to 241. You got about 3-point move. Okay. Looking over to the left, can we see that 2-candle pattern that we mentioned? Kind of the flip. Let's come back over here.
Order filled.
Okay, so we have that flip. Now, as we adjust the time frame, we may come into a wick over wick, drop base drop, a rally base rally, but we're going to keep working our time frame down until we find the leg base. Okay. Right now we have a 2-candle pattern. That alerts me that it's there. Okay, it's there. So 29, I'm just start going down in 1-minute increments, and notice how much price changes, or the picture changes each time you change it just a little bit. Okay. 28, 27. Oh, there we go. So I had to go to a 26-minute chart to get the exact picture. Start by putting a vertical line on the leg in. A vertical line on the leg out. in between the leg in and leg out, base candles only. Using that whole range, place a distal and proximal line around that. See, gaps are the origin of the greatest imbalance. Okay. Depending on what type of gap you have, if it's a breakaway gap, then you would look inside the gap area for a leg base, leg base. We use it as a reverse leg base group of candles. Okay. Save that for a later lesson. We have a lot of critiquing to do, but this is the first step. That group of candles was present, price changed direction. To me, that was mind-blowing. Doesn't matter the time frame, it matters I get the picture right. Okay. I mean, we could even look at having this area as a desired trade to the downside, or even this one. So where would we look for the leg base, leg base? I would go right over to the left. Okay, we're going to have to reduce the time frame. I might even go down to a smaller time frame, like a 5-minute chart. Okay, this is our desired trade. This is where we start to look. Leg in must be green, leg out must be red, and we must have a base. So that was really close, wasn't it? So let's drop down. Let's go up time frame. Let's go to 6-minute. Does 6-minute have it right there? Leg in, base, leg out, and a base. Place where we can place the proximal and distal line around that area. That group of candles was present. Look at that. Those are the trades you desire to get, right? I mean, it doesn't go after your stop. It just finds that group of candles and it changes in the future. Kind of cool, isn't it? Let's change up the products. I mean, let's go out to some FX markets. Aussie USD. Now I'm not going to look at this on a small time frame, but you can. It's the same picture. Let's go out to a little larger time frame. Find a desired trade entry. Hey, how about 120-minute? Let's look right here. We had this last little trade to the upside. Okay. If I want to know why price changed direction here, I just need to look left. Looks, wow. It's right there, isn't it? 120-minute chart. Place a vertical line on the leg in. Place a vertical line on the leg out. In between the leg in and leg out, base candles only. Place your proximal and distal line around that area. See, what you're starting to discover is a footprint of where there is leftover unfilled orders. And it seems those leftover unfilled orders are in a place you desire to have a trade. Here's another one over here, desired trade, okay? Need to look left, okay? Gaps represent the largest order imbalance, okay? But they also represent a leg candle. So a red leg candle in, base, leg out, and base. On a 120-minute chart, you recognize that zone is pretty large, right? You may say, oh, it's too big of a zone. Well, often, very often, you will find 2 to 3 more leg base when you drop the time frame down. So let's circle this area, okay? And I'm going to drop down to a 20-minute chart, just randomly, picking 20 minutes, okay? I'm going to look for the leg base group of candle. What we're looking to do is verify information, okay? Now I still don't have the leg in. I got a leg in, it's red, base, up, the leg out's red. So that's not going to work, okay? Let's try 15-minute chart. This works on any platform. TradeStation doesn't trade the FX markets anymore, but there are. I have some other accounts, other brokerages that I use. I'll text you those. I don't trade a lot of Forex. Got to stop trading every once in a while. All right, I got to find that area that we're looking for. Oh, there it is. Hey, went down to a 15-minute chart. This is our desired trade. And see, it's not on a 15-minute chart either, but we know it worked. Okay, so we're going to keep looking inside there. We got 15-minute. We got it. So let's try 10. And the toughest part you might have is adjusting time frames. Okay. But once you start getting hooked on finding the right picture, you'll become obsessed with it.
Order filled.
And it trains the eyes very quickly. Okay. So a 10-minute chart, we do have a leg in and a leg out. So we don't have the picture yet. So let's drop down to a 9-minute. Okay, looks like we have it. Remember, gaps are a red leg candle, gap down. So we see this as a red leg in. We have 1, 2, 3, 4 base candles, a leg out and another base. And we place our proximal line and distal line. And price dipped right into the zone, change direction. Yeah, I still use Oanda. That's one that I use. There are some prop firms out there that do trade FX markets well. Okay. All right, looks like the markets are coming down even further. So at any rate, as we come back looking for these patterns, ultimately you want to get to that leg base. Go out and start looking at the charts. Use the information that we just talked about. Okay. Find any chart pattern and say, man, I wish I could have gone long here or gone short here. And then go over to the left, adjust the time frame up or down to get that exact picture on the price chart of the leg base. Okay. Happy Friday, everybody. We had a really great session in the live trading room today. So we're pretty excited about everything today. I mean, we're pretty much done for our trading today. So have a great day, everybody. Happy Friday and enjoy your weekend. We'll see you Monday. Bye now.